Hello and welcome back to a very special, very fast Friday update. My name is the General Stone. You're joining me, I hope, for my regular daily analysis. And on the board behind me, you can see today's news as through the eyes of the General himself. Going to get through this one nice and quick today. Get through, look at the hot picks, give you a little bit of an update on the risk-free trade info behind me, and I hope that you can take your opinion and get yourself over to goptions.com to make some trades today. Looking at the world news, we're seeing that stimulus does in fact rule the world. World shares are now at a 5-year high. This is coming off the back of major gains, of course, from the Federal Reserve shock decision to continue the US stimulus moving forwards. They do not plan to cut it back. They do not plan to cut it down, at least for the near future. Very, very big news. And just to relate this back to some previous news, Lawrence Summers, who quit for the running to replace Ben Bernanke, was very, very anti-QE3, was very anti-stimulus. It seems to me that he's been moved and shoved out of the way of the running for the Fed Reserve top seat. Ben Bernanke is going to stay for the meantime, and of course off the back of that, looking at world shares, world index prices, they are on a 5-year high. Very, very big news. Looking at the European banks, it's payback time, you bankers. That's right, 7.9 billion euros worth of money lent to these banks during the European financial crisis. It's been determined today by the European Central Bank they will have to pay back at least 7.9 billion euros. How do you like that, you bankers? Very, very happy about that, me personally, because they really didn't suffer enough. We, the common people, have been suffering through higher taxes, higher consumer prices on all products, everything from food to travel products to even things like soap and deodorant have gone through the roof off the back of these recent financial crises, and I'm really happy to see these bankers have to pay some of that back. Looking at Asia, Tokyo, back to the Nikkei, it is on a retreating trend, a very, very bearish outlook there on the Nikkei, and they're very, very worried about the worldwide stimulus. Japanese and Asia markets in particular are very, very anti-stimulus programs. They're anti-anything that really messes with the natural mechanics of these quantum maths when it comes to actually finding out whether a country is in the black or in the red. I think until we get some further solutions, some further ideals there put into play, especially this European banking situation, to get that sorted a bit further, I think that Nikkei and the Japanese index prices, along with things like the Hang Seng, will continue to fall down a bit further. Talking about things falling and rising, let's have a look at the hot picks nice and quick. I've highlighted here for you the French index CAC 40, not to be thought about with anything else right now. The CAC 40, quite simply, it's a European index. It's France's largest grouping of its companies, and of course right now, off the back of this European bank news and the news this week from Germany and all the different banking union plays, we're seeing that rise up. We're also seeing it gain off the back of these world share increases in terms of where the stimulus was. So CAC 40, I've put here end of day, EOD, for calls. You should be nice if you can just try and follow that trend, and obviously on the weekend get into the one-touch options on these index prices. You will not be disappointed. Over 500% profit available if you do that. Oil, on the other hand, on the flip side, is coming down. I bet on this one on an hourly basis. You have about 8-9 hours worth at least of oil trades that you can get out today, and the strategy that I've seen in play for the last few days that's been working very well for a few of my clients has been the aggressive martingale hourly strategy. Very, very simple. You're placing your trades if that position is looking out of position at any time. So for example, if you place a put and the price has gone up against you before expiry, you can double up the trade amount, take the better price, and follow through with that instinct to get yourself some huge profit. One tiny tip from me: if you're ever going to use a double up strategy or use that martingale themed approach, remember to try and always do the second amount as double and a half. Good example would be your first trade being $500. Your second trade, rather than $1,000, should be $1,250. Why? If you're only placing $1,000 as a second trade, you're only just about covering the cost of the first trade and giving yourself this much profit. Do not risk a ton of money for this much profit. If you're going to risk some big money, go for this much profit. More information there throughout my team and myself. You can contact us via Skype. The information is down here below. My name's been the General Stone. Best of luck trading today.